Hey guys, welcome back to the Bitcoin Fortress podcast. This is episode 180, recorded here on September 7th, 2025. We are at block height 913606. Moscow time 8:99. Fees are 1, 1, and 1. We've got a whole bunch of new stories this week, which we will get into here shortly. And we will wrap up with some of the biggest themes running through the Bitcoin podcast ecosystem also for the week. And of course, then wrap up with mentioning the blog and the book and a new book. So stay tuned for that one. All right, first up, it looks like the SEC posted an ambitious agenda, including custody, trading, and market structure reforms, with a joint SEC CFTC statement on coordinated oversight. So the regulators are going to get into some crypto rulemaking, and they're calling it a sprint. So this marks a shift, obviously, from piecemeal enforcement, litigation, whatever they were doing in the old days, towards more comprehensive frameworks. The coordination is also good because there have been turf wars between agencies, especially the SEC and the CFTC, which should ease compliance burdens for institutions, which will then, of course, encourage more institutional adoption, which make number go up. It also paves the way for traditional exchanges to handle Bitcoin under clear federal guidance, which is a plus. And it could accelerate ETF approvals and custodial clarity for pension funds and banks. So, long story short, all good for adoption um, uh, for the big institutions. The SEC and CFTC staff also confirmed that regulated exchanges can list certain spot crypto assets. And of course, Bitcoin is going to be first in line. This creates a pathway for NASDAQ or NYSE style listing of Bitcoin spot markets, which would be pretty interesting to see. Would bring Bitcoin under the same surveillance and audit regimes as equities. I'm not sure how they're going to regulate that because it's a global market, but I'll wish them luck. And of course, institutional investors will get liquidity reporting and compliance that they need in order to scale their allocation. So, again, all part of the adoption story. Senate Banking Committee also floating some new market structure bill. New draft proposes federal licensing, custody rules, and reporting standards for digital asset venues. Um, Federal preemption could override the current state-by-state patchwork. Custody clarity would certainly, again, open doors for banks and broker-dealers to custody Bitcoin directly, a business I'm sure they would love to get into because there's money to be made. And it could also integrate Bitcoin into the capital markets infrastructure a bit more while still preserving its commodity classification, which seems to be pretty well understood. Bitcoin price rebounded towards 113,000. Dominance climbs also. Um, Price did regain ground, but as dominance ticked higher, and then it dropped again because that's what Bitcoin does. With Bitcoin dominance up, that means that there's a rotation away from the shitcoins towards Bitcoin. And institutions perhaps differentiating Bitcoin from speculative tokens when risk appetite shifts. And again, this sort of reinforces the Bitcoin only thesis in times of macro or regulatory uncertainty. Of course, we had some weak US payrolls data last week, which triggered a quick Bitcoin spike and then a retrace. So Bitcoin is now increasingly trading as a liquidity proxy where we have bad data and then people expect rate cuts, which then make risk assets jump with lower rates. Volatility around these prints, though, shows that traders watch the Fed reaction, not the fundamentals. Longer term, though, the macro noise fades and Bitcoin's scarcity story persists regardless of the jobs data. So it will continue to bounce around the price in the short term, but in the long term, of course, it's sort of on a path of up and to the right. Some funds plan to buy $1 billion in Bitcoin in 6 months, targeting corporates and family offices. This is the Sora Ventures. They launched a $1 billion Bitcoin treasury fund for Asia. Seems like they're trying to replicate the MicroStrategy playbook for Asian institutions. This will accelerate regional adoption beyond retail speculation toward treasury level holdings. And this could spark competitive accumulation among Asian corporates as a hedge versus foreign exchange risk. So, again, this corporate treasury story of the year uh, continues to roll along. Public companies now hold over 1 million Bitcoin. This means that the combined holdings surpass 5% of Bitcoin's circulating supply, which is a pretty significant milestone. The major holders include MicroStrategy, Tesla, Marathon, Hut 8, and Coinbase. This course signals structural reduction in available supply for trading. Each new corporate participant will then pressure others to consider Bitcoin for balance sheet diversification. So this is sort of like game theory playing out as more and more corporates start holding Bitcoin on their balance sheets. Um, Again, some people are using it to hedge, others are using it to leverage their balance sheet so they can grow and buy more and all that, which of course MicroStrategy has probably done the best in that department. But it's continued demand, and it's some people say it's going to be more stable demand than retail. I'm not sure what I think about that. Um, it's probably if they have to, they'll sell it. Um, doesn't mean they're necessarily going to be diamond hands, but it again is another source of demand for Bitcoin, which tends to shore up the price. American Bitcoin debuted on Nasdaq with quite a bit of volatility. Apparently, trading began with multiple halts as the speculators piled in. We talked about this last week, but this is a new entrant that combines mining revenue with direct Bitcoin accumulation strategy, as opposed to just a byproduct of mining. So investors in this company will get sort of a hybrid exposure. They'll have, an operating business that's a Bitcoin miner as well as a Bitcoin treasury asset. Long-term success will depend, of course, on treasury growth and operational execution, not the day one trading frenzy. And for me personally, I rather just own Bitcoin and cold storage and not get into all the treasury companies. But there's people that like to get a little bit more return, speculate, whatever. And so those are leveraged proxies to Bitcoin. The University of Hong Kong Business School is going to start accepting Bitcoin. HKU will accept Bitcoin for tuition and donations. So, higher education adoption is normalizing Bitcoin payments among younger generations is not a bad thing. Hong Kong's licensing regime makes this legally and logistically feasible, and it could encourage alumni donations in Bitcoin, expanding Bitcoin use beyond uh, whatever speculation or investing or whatever you want to call it. Uh, that's sort of how the TradFi looks at it. But again, another interesting angle on adoption. Next, we have an update from El Salvador. It looks like they've scheduled the Bitcoin Histórico conference. This is a government-backed event set for November in San Salvador, the capital of El Salvador. This reinforces El Salvador's branding as Bitcoin Nation. There's expected to be, nothing's really been announced yet, but there's expected to be announcements on mining, tourism, and financial integration. Bitcoin has certainly been a boom for El Salvador's tourism. And of course, this signals continued political commitment, regardless of global skepticism about El Salvador's Bitcoin mission. So, be interesting to see when the agenda for that comes out and what they're actually going to be covering. Tether launches USDT on Bitcoin via the RGB protocol. So Tether now moves stablecoins onto the Bitcoin infrastructure using RGB's client-side validation. This reduces reliance on Ethereum, Tron rails for settlement. It brings stable liquidity directly into Lightning-enabled channels, which is very big. And although it's still centralized issuer risk, it does increase Bitcoin settlement utility globally. So, pretty big news. Might have mentioned it last week, but again, bears mentioning again. This is a really big deal for Bitcoin. Bitcoin Optech number 370 highlights a couple things. Developer updates include splicing channels, blinded paths, and tapscript opcode drafts. So, splicing is resizing Lightning channels without downtime, which creates a better user experience. So, that's a big deal. Blinded paths are real important for privacy. These result in improved receiver privacy, so it's harder to surveil Lightning payments, which is one of the big benefits of Lightning. One of the trade-offs, of course, is it is a bit more centralized and it's not on chain. But one of the big benefits of Lightning has been that you get much greater privacy than you do transacting on chain. So it's good to see this type of development continuing. And of course, it shows that the Bitcoin infrastructure development prioritizes reliability and plus privacy over flashy narratives. Well, people are already freaking out about Red September. Makes me think of the movie The Hunt for Red October. But that was a Sean Connery movie. It's a pretty long time ago. Um, It's about the Russian sub captain that defected to the United States, and the U.S. got his submarine. You should watch it. It's really good. But we're not talking about the hunt for Red October. We're talking about Red September, which is traditionally kind of a bad month for Bitcoin. So, and so people are debating this again. Analysts are split over whether September brings weakness or breaks the trend. Again, historically, it's a weak month for Bitcoin returns. But then the counterpoint is, but there's ETF inflows and corporate treasuries. now absorbing supply regardless of season and. So cyclicality might diminish as structural buyers dominate flows. I guess we'll see. I don't really care if it dips in September. I'm going to be stacking sats and staying humble. And if it rallies, well, that's just fine too. MicroStrategy adds 449 million in Bitcoin. They just keep gobbling it up. They bought 4,048 Bitcoin at about $111,000 average price. Now their total holdings exceed 250,000 Bitcoin. That, my friends, is a big, big stack. They've been dollar cost averaging at corporate scale. The market impact is muted since they do all this execution on the OTC exchanges. Equity investors now treat MicroStrategy as a leveraged Bitcoin proxy. Talked about that earlier. Uh, Similar way, the miners are a leveraged proxy to Bitcoin, much similar to the way that gold miners are a leveraged proxy to gold. Uh, they tend to go up a lot faster than gold, usually in up markets, and they also tend to crash a lot faster too. And I think we've seen the same thing with Bitcoin miners. And we're probably going to see that with Bitcoin treasury companies. Can't wait to see how they handle the next bear market. Um, this again reinforces corporate Bitcoin adoption as a capital allocation strategy, not speculation. So Sailor's just going to keep stacking those sats. South Korea's Bitplanet launches a $40 million Bitcoin treasury allocation. So this was a rebrand of the company, plus the first corporate Bitcoin treasury in South Korea. So it again is modeled after MicroStrategy, but they've adapted it for regional regulations. This adds yet another Asian corporate legitimacy alongside Japan's Metaplanet and some Singaporean firms. It also sets the competitive precedent for peers in Korea's tech-heavy economy. So um, the corporate adoption and the Bitcoin treasury movement really seems to be gathering some steam right now. Um, and it doesn't really show any signs of slowing down. So again, all good for underpinning the price, keeping that demand out there. We'll see. We'll see what Bitcoin decides it wants to do. Sometimes it has a mind of its own. ABTC raised $2.1 billion dollars, or has a plan to. This is an at the market equity program to fund Bitcoin purchases and also to fund mining growth. This mirrors MicroStrategy's approach, equity dilution traded for Bitcoin accumulation. Investors are betting on long term Bitcoin appreciation over near term EPS dilution. That's the case with all of these treasury companies that are using equity to buy more Bitcoin. And it could create steady buy pressure again if executed gradually over quarters. So there's another one to watch. Next up, Block's proto mining rig targets decentralization. This is an open source modular design with a 10-year lifespan goal. So a new mining rig. The key here is this would reduce dependency on Chinese ASIC manufacturers who have dominated market share to date for Bitcoin mining rigs. The modular parts would allow upgrades without replacing the entire rig, which would then result in lower e-waste and longer ROI cycles, which is a benefit. And it could also decentralize mining geography by lowering entry barriers over time. So Block has been very busy, and this is their latest. Again, we see corporate Bitcoin adoption broadening beyond the miners. We now see payments, fintech, and gaming firms holding Bitcoin reserves. Again, the corporate holder base is getting diversified beyond crypto native or mining companies. Also signals CFO acceptance of Bitcoin as a treasury hedge, not just a tech experiment. That was probably a big hurdle to get over in a lot of these companies because the CFO would have to figure out Bitcoin, and that takes a bit of time and effort to study. And it could also push accounting standard setters toward, although we kind of already have fair value mark to market treatment in the United States now, uh, which was pretty important for Bitcoin because previously it was accounted for where you would only write it down if it went down in value, but you weren't allowed to mark it back up. Um, but I'm not sure how other countries or international standards handle that. So it'd be nice if it all was done mark to market, because that's probably the best way to account for Bitcoin. Congress returns with a busy crypto calendar. So there's going to be an SEC CFTC roundtable on September 29th, and there's multiple hearings queued up. So crypto is now regular congressional business. It's not a niche topic. The likely focus will be custody rules, stable coins, accounting clarity for corporates, and of course, to spice things up, the 2026 election cycle could make pro Bitcoin policy a political differentiator. So we'll see. We'll see how that plays out, but I'm sure there'll be a lot of noise around that. Next up, there were some reports that a dormant whale moved 80 Bitcoin after 13 years. So this was a wallet from 2012 that sent 80 Bitcoin this week. Again, there's been some older coins moving at this stage of the cycle. It could signal estate planning, OTC deals, or just simply recustodying, moving it to a different wallet rather than getting ready to sell. But whenever the coins move, people think, oh, there's going to be a big sale coming. With ancient coins, when they do move during bullish transitions, liquidity to recycling, it's usually liquidity recycling. It's not panic selling. Um, and so, but everybody watches the chain for that kind of stuff to see what it might mean. Are we at the top of the market? I don't think so personally, but what do I know? Next up, public companies now control 5% of supply. So we did talk about this earlier. A little bit more information on this article relative to the fact that post having daily issuance, this is the coins that are being mined, is about 450 Bitcoin. It's tiny compared to the corporate demand scale. So again, this creates structural supply squeeze narratives if the trend continues. Everybody's been waiting for, a huge spike in the Bitcoin price, and it just hasn't really come. It's just been bouncing all around, and but it's still up pretty good year to date, I think. 20% or something like that. Not bad. But it certainly hasn't gone parabolic. And you need to be careful when that starts happening. You know that it's that probably won't last long. Macro liquidity context. So let's talk about the Fed rate cut odds. So now, after I think some of the economic news from last week, in particular the extremely weak jobs report, or I guess weaker than expected, I don't know. Didn't look too good to me either. Traders are now pricing multiple 2025 rate cuts, and of course, Bitcoin responded to that. And then it didn't, and now it's climbing back up, so it's just kind of bouncing around. But uh, if the Fed cuts rates as expected, interest rates will go down, and that will tend to be very bullish for risk assets, barring some other problem like with the economy or black swan event or something like that. So uh, the interesting thing will be what will rate cuts do to inflation, because we have obviously sticky inflation at the moment, and cutting rates is not going to make that much better. But again, adoption and scarcity matter just as much, if not more, than the Fed policy expectations. From India, we have some news that an Indian court jailed some officials for Bitcoin extortion. This is in Gujarat. The court sentenced 14 people to life in prison in a very high profile case. What does this mean? Well, Bitcoin crime is treated like any other serious criminal offense. So if you steal Bitcoin, you're going to jail. And again, I think, and we talk about this every week, this underscores the need for personal security, privacy tools, multi-sig best practices, um, operational security. Keep a low profile. Don't let people know you have Bitcoin, especially not the government. Oh gosh. And we talked about the universities as Bitcoin payment hubs in Hong Kong. Another article talking about that. Media narratives are split on the market outlook. Again, we talked about that also. So there's multiple pieces of reporting on the same news, which is the whole doom and gloom red September thing that we talked about. I guess for this, it just reinforces the need for us to filter the noise and focus on fundamentals and don't get caught up in short-term market timing. Um, Adoption and infrastructure is really the long-term signal that we need to pay attention to. Price action, less so, and especially if you're dollar cost averaging, you're just happy when you're buying the dip. Not super happy when you're buying the top, but um, that strategy will ultimately benefit you in the long run. So let people screech about the price. We'll just keep staying humble. Some news from the ETF flows that the inflows have been steady across the US spot Bitcoin ETFs recently. Uh, they do pull back from time to time and they do become sellers, but generally speaking, it seems like you've got less emotional, maybe more institutional buyers in there just making allocation decisions. And so that tends to stabilize the flows. And of course, as we've discussed before, that the ETFs, along with the Bitcoin treasury companies, along with the spot market and everybody else who's buying Bitcoin, does provide a floor under the price during macro or seasonal volatility. And that's, I guess, probably the most notable difference between this market cycle and past market cycles, which were perhaps more retail driven. So that's a good thing. And even if it doesn't, result in the same kind of upside moves, if you're trying to hold a generational asset, it's a lot easier to hold something that doesn't go down 70%, you know, in a bear market. There's an opinion piece on why only Bitcoin belongs on corporate balance sheets. And again, there'll be links to all of this in the show notes, which you can check out later. This particular editorial argues that altcoins equal tech risk and that Bitcoin equals monetary asset. Of course, I totally agree with that take. Bitcoin's neutrality, decentralization, and its liquidity make it uniquely suitable for treasuries. This is, of course, not news to those of us that know, but companies are slowly discovering this. And for a CFO of a public company, it certainly allows them to avoid regulatory government governance and security headaches by staying Bitcoin only. So, um, um, interesting piece, and hopefully we'll hear more about this and more corporate adoption will continue to happen. From Hong Kong, we see that licensing and some stablecoin laws will expand compliant on-ramps. So this is some tailwinds that could boost Bitcoin rails. These changes allow payroll, B2B settlement, and remittances via regulated Bitcoin service providers. This also reduces gray market friction and encourages mainstream corporate adoption. So, um, good to see. There's been some Lightning UX upgrades. Talked about this a little bit earlier. Um, Again, another article highlighting the fact that users are getting simpler channel management, merchants are gaining privacy by default, and of course, this moves Lightning closer to it just works experience for non-technical users, which to this point has been one of the challenges with Lightning, is it's does require a lot of technical know-how to set up a channel, to manage a channel. Not so much to transact. I mean, I guess, if you wanted to buy a cup of coffee with your Lightning wallet, it's pretty easy. You just scan the QR codes, send the sats, and you're done. Um, but sometimes the payment fails. And if you're making a big payment, like, I don't know, you're replacing your air conditioner and the guy wants sats, and you send it to him on Lightning, and then the payment fails, that's not a good thing. So then you do it on chain, but fees are pretty cheap on chain right now, so maybe that's okay, but that won't always be okay in the future, which is why we need Lightning. And let's see. Finally, we have developer resilience, fuzz testing, and bug bounties. So there'll be some ongoing fuzz testing campaigns to find and fix consensus edge cases. Bitcoin dev culture prioritizes reliability over speed. This is why Bitcoin remains the most secure chain. But long-term confidence depends on boring, methodical engineering without obviously fundamentally changing the protocol in a way that makes it less secure or less decentralized. We don't like those things. All right. Taking a look at the podcast themes of the week. Um, We have regulatory convergence as the topic, and that would include the SEC, CFTC, and Congress all moving towards clear frameworks. I'm sure there's a lot of conversation on both sides of that, why it's good, why it's bad, but generally, most people would agree clarity is good, and allows Bitcoin to be more mainstream, gives institutions permission to engage, and that's just good for the network. Corporate accumulation was also on the menu a lot. Talking about the 1 million plus Bitcoin on corporate books, structural supply shock building, in some people's opinions. Talking about infrastructure progress, this was also topic, splicing, blinded pass, RGB, Bitcoin just quietly scaling without drama in the background, under the radar, which is beautiful. And then globalization. This is with Asia, Latin America, US all adding policy and adoption tailwinds simultaneously. So overall, kind of a bullish wrap on the podcast themes. Before I wrap up, I did want to highlight this week's featured post on the Bitcoin Fortress Substack. This one is entitled BitChat, Peer-to-Peer Communication for the Sovereign Individual. So check that one out. Lots of good stuff coming up there in future installments. I actually have a three-part series starting next week on Bitcoin under the hood. So this is more of kind of like taking a technical part of Bitcoin and breaking it down into simple components so it's understandable. And so it kind of broke down three major parts of Bitcoin into that. So that's coming up. We have success, failure, and the lessons of Bitcoin will be posted. That was one I went over in last week's episode that I read. And then after that, it's Bitcoin's many deaths and its relentless survival. So we're going to talk about all that. Did want to mention the book, and there'll be a link in the show notes. This is the Bitcoin Fortress, a simple guide to Bitcoin for beginners. It's just a basic book to give you a basic understanding of Bitcoin. So it's maybe useful for orange pilling. It's pretty short, sweet, and I have it on audio and Amazon, paperback and Kindle. And now the big news. I just finished writing a new book on Bitcoin retirement and estate planning. And this is a pretty simply written book on a very complicated and arcane topic. But really excited about this one, and we'll be publishing it soon. So keep an eye out for that. And then in the future, I'll put links in the show notes once it's published. But it's a pretty good sized book, covers everything that a Bitcoiner needs to know, and really from a Bitcoiner's perspective. And like I said, I'm really excited, very passionate about this particular topic, and excited to see it come to fruition. And with that, that will bring episode 180 of the Bitcoin Fortress podcast to a close. So, with that, I will talk to y'all next week. Stay humble, stack sats, and keep your fortress secure. Bye bye.